Hey, good morning, everybody. Welcome to another day of Market Report brought to you by Mike Bjork. Today is Tuesday, June 23rd. We got a few big hitters today in terms of the economic news releases. We'll start off with the Case-Shiller Home Price Index for the month of April. So back in March, we had a 12.4 year-over-year appreciation. For the month of April, that slimmed down a little bit to 10.8% year-over-year appreciation. So that's not saying home prices are going down. They're just what that's saying is that home prices are uh, not going up as rapidly as what they were last year. So we had a pretty big spike last year, and they're still going up a little bit more of a healthier pace versus going out too much out of a control pace, like last year. And the other index we got today is the FHFA Home Prices Index. So we got a couple home price indexes here, and 6.5 was back in March, and April was at 5.9. So this is a little bit more healthier especially with interest rates trending upwards. We go a little bit too rapid on the home prices, and all that's going to mean is that we're going to have a bigger crash once it gets too expensive for people to afford to purchase. This also allows a few first-time homebuyers to actually get into the market as well. Now we also got the consumer confidence index for the month of June. So back in March, or excuse me, May, we had an 83 rating, and it was supposed to have a slight uptick for the month of June at 83.5, and it jumped all the way up to 85.2. So really good numbers there. And also really good numbers is the new home sales for the month of May. So back in April, we had 433 new homes sold, and forecast was supposed to go up a little bit to 440, and actually far exceeded that to 504. So really good numbers today. And again, the home price indexes, even though it looks on paper like it's not great, but it is great because it's still going upwards, and it's just not going as rapidly as last year. Last time we had that, of course, we had a huge fall. So let's keep it more of a healthy pace here. Headline news: we got the stock market is currently up. They like the data that they saw today. And then also a comment today, which we do have to kind of keep an eye on because this could become more relevant with the Fed. Now, Flosser was speaking. He's one of the Fed members out there, and he was indicating that he's all in favor of going ahead and raising interest rates as soon as next quarter. Now, as we mentioned before this last Fed meeting, that there was jitters with the investors that potentially they could move up their time frame as to when they might actually start raising interest rates. So what that mean, the reason being is that we're showing better numbers on the job front, and also the inflationary. With the last 2 months in a row, we've had some pretty high inflationary numbers. So to fight inflation or keep inflation in check is we have to we raise interest rates, bring inflation down to slow things down a little bit. We do have to keep an eye on inflation, because 2 months in a row we're like at 0.4. Those are pretty big spikes there. So we need to see if that's going to be, if that's going to continue that trend, that biggest spikes, or is it just going to over moderate? It's just 1 or 2 month blips on that. So those are going to be important. We were exceptionally low in terms of inflation, so we needed that a little bigger increase to bring us up to a little bit more healthier levels. But we just need to make sure that it doesn't go out of control. And to keep it out of control, they do raise interest rates as a result. So let's go ahead and take a look at the bond market. Today we're slightly up today versus where we left off yesterday. Yesterday we were up at 102.05, and right now we're down from the day so far about 102.06, and we were even as high as 102.12. So we're up, we're not, but we're kind of more of a sideways pattern. It's not enough to really to make any changes in the interest rate, but we're slightly above where we were yesterday, where we left off yesterday. All right, folks. So interest rates are about where we left off yesterday, which was even an improvement from the day before, or from Friday. So that was a good sign right there as well. All right, folks. Have a wonderful day, and we'll look forward to seeing you guys tomorrow. We do have more data this week, so stay tuned, and look forward to seeing you guys tomorrow. Thanks again for watching.